Hello, everyone. Welcome once again to another exciting episode of Curious K podcast. And I'm very excited about this episode. As you know, I'm always very excited about every episode. This episode is featuring one of the entrepreneurs I've been working with for months now. And it feels very good to have him on the show to discuss about what he's building, challenges he's facing, and for us just to learn about his product and also his plans for the future. So on the show today, I'm very excited to have Folagbade Timileyin, who is the founder of Guava Credit. And as you know on Curious K podcast, this is a show where we have amazing conversation with startup founders, ecosystem enablers, and everyone working just to drive impact on the African continent. And this episode is not an exception. So I'm very happy to have you on the show, Timileyin Folagbade. Thank you very much for joining us on Curious K podcast.
Thank you very much for having me. It's a pleasure being here.
All right. Yeah, so let's get to know you. Can you tell us a bit about yourself?
Folagbade Timileyin once again, like you rightly said, and I'm the co-founder of Guava Credit, a fintech startup focused on the buy now, pay later solutions for businesses. So basically focused on B2B businesses, and we've been running the business for quite some months now. That's it about me.
All right. Thank you. So let us just get to know your background into entrepreneurship. I know you started building businesses very early, and Guava Credit is not even your first foray into entrepreneurship. So what was it like for you in terms of just trying to solve problem, and why fintech? Is it because a lot of businesses are raising a lot of money now? What's the inspiration for starting out as an entrepreneur?
Okay, for me, I started very, very early, and let me say my parents introduced me to businesses. I started managing my father's fish pond, I think at SS1, if I'm correct. So my father has these ponds, like about 2 to 3 fish ponds, and I was last born. I was the only one at home, so I had to take up the responsibility by managing those farms. So I managed them till I think SS3 or probably a year after leaving school. Then I think from JS3 to I started distributing books for my mom across 2 local governments. So that really was my foundation into businesses. Then when I gained admission into school, my school, I entered the private university, so we don't cook, and we have at a particular point in time we might have about 200 to 300 students trying to order the same food. We call it mixture then. So mixture is a combination of rice, jollof rice, and probably a meat or a fish. So, and about 200 or 300 students might be trying to order that. It's a private school, so we don't cook. So we have 2 3 cafeterias. So I really wanted to decongest the crowd at that point at the cafeteria at any point in time. So that's why I came up with that. So the name of that startup then was called Classic Food. So you could go online, order your food, and all that. On my 4th year, I was using a Samsung then. I think X6 or X7, if I'm correct. I bought it, I think, around 110,000 naira, and I was so scared of the screen getting damaged, so I came up with this startup called Save My Gadget. It was an insurance platform for gadgets, and we had to shut it down because of regulations and all that too. But we were able to insure a few gadgets and all that. So, but about your question as regards why fintech and all that too. So when I was in school, people knew me as an entrepreneur. So I they keep coming to me to borrow money, and we give them ridiculous interest rates. So, but for me, it was quite interesting, and that was my first encounter with fintech. Then, but on leaving school, I discovered that my mom, which has been into business for a very long time, find it very difficult to access credit, even after running a business for 20 good years. And my sister too, which was also into business, to find it very difficult to access credit. So I really wanted to solve the credit issue. And that is why I came into what is it called fintech, and that is why even our business today still focus on business to business, providing access to credit to those business. So I was really trying to solve pain points for people who are close to me, who matters to me, and that's why I stumbled on fintech, not because people are raising money.
All right, amazing. The story about the food delivery is just very interesting in your school. And I would just like to talk more about how did that work out? Do you have any issue with the school authorities? Were you using bikes? Were you delivering? What was it like? I know that's really going to be interesting.
No, it was actually very interesting, and I think even early this year I was even talking to a friend, and I was recollecting the whole process of how the whole process worked during that period of time. So we're not really using bike. We are using we employed people from neighboring towns surrounding the school, and about 2 or 3 of them. We're using foot. We're delivering by foot then, because it was more of like a small community. The distance between the cafeteria and the hostel was not too far, but students can be very, very lazy. And because of like I said, we're trying to decongest the crowd. That's also a major selling point. So we started with 1 or 2 cafeterias, and
Were all these cafeterias in the school?
yes, they were in the school. So we started with 1 or 2 cafeterias, and the first model we tried working out was just to connect provide a platform for the restaurants, for the cafeteria rather, so that they could customer could make order. But along the line, we discovered that those customers were those restaurant cafeterias were saying they don't want to bear the burden of servicing bikes, employing delivery passengers and all that. So we had to show that the responsibility and all that. But within the period of time we run the delivery service, we were able to do well over 3,000 deliveries, successful deliveries, and it was great. It was interesting, even though it was clashing with my academics. I can remember vividly well me stabbing class or probably delivering food just to meet customer needs in suits and tie, and it was quite interesting. It was actually very, very interesting, and that got me 2 awards actually in school. My alumni, entrepreneurship student, and my faculty entrepreneurship student. So it was quite interesting. That was my first major experience in startup world, and I learned quite a lot during that period.
That's cool. And running this business, I mean, this does not require you raising funds. Everything was bootstrapped, or what was it like? Did you started with like some funds you were saving? So what was the process for you starting out?
So it was fully bootstrapped. Then my pocket money around that period of time was around 25,000-30,000 per month. So I basically took out my pocket money for a month. Then my father gave me 7,000 naira for our first posters and flyers we did then. Then subsequently I borrowed money from one of my friends called Guava. He gave me, I think, about 10-15K then to continue running the service. And
So it was bootstrap, family and friends.
it was family and friends, fully bootstrapped.
Interesting. I like that. So why didn't you scale it? Why didn't you scale it outside the university hall?
Yes, we actually tried scaling it outside the university. Our attempt of scaling it was actually very, very woeful. We tried scaling it to a neighboring city called Akure in Ondo State. We acquired 2 bikes, and it was a terrible experience. It was great and terrible at both cases. So we learned, for the school it was a controlled environment. We interacted with basically students. This time around we had to do marketing. This time around we had to get an office space. This time around we had to do a couple of other things and all that. So it was really, really very, very difficult. And that major issue we had then was talent. We did not have the right talent in terms of from technical side of view and from the driver side of view. Those drivers were completely dishonest. Getting customer out was difficult because at that point in time, delivery was not really, really, really a big deal. It was funny. In fact, I can even remember vividly well. One of our bikes had issues, and the drivers, one of our delivery drivers, collide with the mechanic, that's the Octo Workshop guys, and they were siphoning money from us. We paid them to repair we give the bike, the delivery guy, okay, go and give the auto mechanic workshop money to repair this, and still we exaggerate the fee. So we had to basically stop the expansion process, focus back on the school before graduating and all that, before stopping down the business. But it was a bittersweet experience. I would really love to have that. What is it called? That experience. Relive that moment again, but now at least with a better experience. And
Very interesting to learn about starting out. I mean, building businesses while in school. I mean, you were able to identify the problem of delivery, within your institution, and the thing for you then was just to solve that problem. And the good thing is you made money. While doing that. I mean, that's fun, and he also learns a lot, which is important when it comes to entrepreneurship. I mean, when you build something, there are always lessons to be learned, and I think thank you for sharing that very interesting story. And you mentioned something about insurance, like your screen, because I remember some weeks ago or months I was having conversation with someone. And we're talking about insurance of gadgets, or how low insurance penetration is. And there was this book I also read last month, A Prosperity Paradox, and there was a story about how in a particular country the penetration rate of insurance was very low, and this company had to innovate, to sell insurance to low-income families. And I think there is still a lot of opportunity when it comes to insurance in Nigeria as of now. So let us know, what was that for you when you try to build something around gadget insurance? I think that would be a very interesting story for us to
so like you said, the insurance penetration in Nigeria is still very, very low. I think as of the last time I checked, it was between 3 to 4%, if I'm correct, compared to other African nations. I think South Africa is the highest we have in Africa for now. And then I think insurance is also very high in places like Zimbabwe, but Nigeria is extremely very, very low. So, but for us, the gadget insurance was me just like trying to solve a pain point for myself. And I also had the camera. I was doing photography then too. So I know how much this thing costs me. I paid through my nose, and I was really trying to solve that. And it took me a year to convince my co-founder then to really come up with a policy. He was the insurance guy, I understand nothing about insurance. So for me, I think the insurance generally within the country, I think there's still a lot of space for entrepreneurs or probably people to solve within that space. A lot of education has to come in, a lot of regulation and all that, in terms of friendly regulations and all that. And I think the Nigerian government came up with NICOM came up with a micro insurance policy regulations some few years back. I think about a year or 2 years ago. And I think it's gradually taking shapes within the country. So it's still a very huge space, and probably later in the future, I would still love to go back in that space and play with that space. So it's an interesting space with opportunities.
Yeah. So how did the phone insurance that you're trying to build? I think you built something around that space, right?
Yeah.
What was
so
that like?
we were able to structure ours into monthly, more of like pay as you go. So you can subscribe for the insurance gadget protection screen protection plan for either a month, 3 months, 6 months, or a year. So it's more like a ticket service kind of insurance, whereby you subscribe for a month. Then after a month, if you don't do the service, you can stop it, and if you need the service, you can keep doing that over and over a month. So, but we try to drive more of the 3 months plan to 6 months plan. Then, so it was basically for it goes for an average of between $2 to $3 for 3 months to 6 months. So depending on the kind of gadget you use and how expensive it is. So we cover close to 80% of the cost of replacing your screen, which is quite kind of much when it comes to from the customer's point of view. Take for example now a Samsung phone. Let me say you're using an X10, and probably the cost of replacing the screen is probably like 80,000 naira, and somebody is coming up to taking off 80% of that. That's kind of huge. So So when we did that in school, we had about 200 subscribers before we shut it down, and that was because there was no micro insurance policy at that point, framework at that point in time. So there was no way we could raise scale that and all that. So that was one of the major reasons why we put a stop to it. But something we still consider starting in the future. But
all right, yeah, that's really interesting. So let's talk about Guava credit, right? I remember I mentioned, I was talking about your business to someone. I said Guava. I think I was like, yeah, I like that name, Guava. Yeah. So what inspired Guava?
To be very honest with you, I'm a fruit person. I love eating fruits a lot, and guava is one of my favorite fruits. So I was looking for something a little bit personal to me, something people can easily relate with, something people can easily remember. Something was more of like apple, we have apple and all that. So that was nothing really special. So that was just basically something simple, relatable, and something people can easily remember.
Nice, that's cool. So let's talk about what you do at Guava now. You provide buy now pay later solutions for businesses, right?
Mm-hmm.
Can you tell us about how the product works?
So Guava credit works in this is basically how it works. Partner, let me say we onboard businesses, large businesses that deal with small scale businesses like manufacturers, major distributors that small scale businesses go to buy from. We onboard them and we integrate our solutions at the point of checking out, so that these businesses can then spread payments over time. So because traditionally this business already offered this kind of services before, but it's at the detriment of their cash flow. So we come in at the point of payment and at the point of checking out after verifying the small scale business, verifying their credit worthiness. We partner we onboard large scale businesses or probably business manufacturers and distributors that deals with small scale businesses, and we verify the credit worthiness of these small businesses and offer them credits at the point of checking out. So basically, a small scale business can probably go to Nestle or probably go to Unilever or Coca-Cola, buy a product of 50k, 100k, and spread the payment over time. That's basically how it works.
So what's the opportunity like in Nigeria, right? I mean, we don't have a lot of companies offering credits, right? I mean, there is opportunity in the B2C part because, for example, friends in the US, UK, or advanced economy, they have access to buy a whole lot of stuff. The new iPhone is out, they can get it on credit easily, So there are a lot of opportunities in that space. So what do you think the market is like in Nigeria, and why are you focusing on businesses, or why are you providing that infrastructure or support for businesses so that they can provide credits for the businesses that they are working with?
Okay, now if you like I said earlier, I said for me solving a pain point that is close to that affects people around me, and I made mention of my mom and my sister. And now looking at the big picture here, the retail space in Nigeria is a little bit above $300 billion US, and the majority of these businesses that are excluded from having access to credit. In fact, majority of those banks will tell you they're not credit worthy, even though these businesses have been running for the last 25 years and have been turning in an average of like $100 millions in terms of naira and all that annually, and they are still not credit worthy. So it's a very big space. It's huge. $300 billion is something very, very massive. So these people are basically don't have access to credit. So we understand that some of them might be very, very funny when it comes to repayment and all that, and that's why we're not giving them cash. We are basically giving them a form of invoice financing to enable them get goods they can sell, enable them improve their standard of living, enable them send their kids and their wards to better schools, improve their give their children the opportunities they never had and improve their business generally. So this for the credit space is still very, very big. We have quite some players within the credit space, but so we are more of like a pioneer, and the space is still very, 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 let me use the word, virgin grant. So we hope to capture as much market.
So what has been the traction like for you in terms of what you've done in terms of partnership? Was it easy? Was it easy for you securing those partnership? What has been the process like for you two now?
So I won't use the word easy. Nothing good comes on a platter of good. I can remember we trying to negotiate with one of the major distributors, or probably on board one of the major distributors of an FMCG product within the country, and we sent an email to the man, and the man called me and he was like, "You don't talk to me that way," and he was telling us how he has been operating with the last 30 to 40 years within the space and all that. So it has not really been easy. We met dealing with people who have a whole different mindsets, and who feel that the young boys within the market are a little bit very arrogant and don't know how to conduct business. So we have to learn how to deal with these people. We have to learn how to navigate within the space. And as regards partnership, we've been able to partner with some financial institutions in terms of lending partners, and even though they've not been forthcoming like the way we expected, but at least it has been interesting and exciting so far. Then we're also we've been, as it stands now, we've been able to finance over 100 businesses and counting, and which is kind of very, very interesting for us. And we're also trying to have conversations with major manufacturers and distributors within the country. I think hopefully in the next 1 year we should be in a better space, and in the next 1 year I see us doing well over 50 million US transaction. So this is our first year so far, so I think we're not doing bad for a small startup.
All right, nice. So that takes me to funding, right? What has it been like for you? You've been around for a year, or a little over a year. So what has been like for you? Are you actively raising funds now? What stage are you like in that process? Or are you just comfortable to grow to get some numbers before you start that conversation?
Yes, in as much as numbers is very, very important for us. We've basically been bootstrapping for the last 1 year, and we are currently trying to raise from family and friends, so as to enable us improve our traction and help us improve our technological stack and serve our customers better. So we're currently trying to raise funds from family and friends. So if you're interested in this, you can just send me an email at timmy@guavacredit.com, so we can start the conversation. So we are actively raising funds, and it has really been challenging. At first, this is my first attempt at raising funds from the typical VC funds and the angel investors. So at first, I certainly don't understand how raising fund works. There's this language you use for investors that they really want to hear. So it has been a very exciting journey for me, and we are learning very fast. Myself and my co-founder, we're learning very, very fast. We've had some forthcoming conversations with some angel investors and some VC firms, and I think hopefully before the end of the year we should be able to close our round, or probably early next year.
Right. All right. Thanks for sharing that, Timmy. So is there anything else you'd like to tell us about Guava Credit?
So I think for Guava Credit, let me just talk about our vision. Our vision is to bridge the gap between access to credit for businesses, and we hope by in the next 10-15 years we should access to credit for small businesses in Africa should be reduced to the minimum barest number. So anything that will enable us to do this is something we are certainly very, very interested in doing. And I think I need to stress this much more better. For us to do that, we need to raise funds, we need to attract talents, we need to work with the best in the industry. So once again, if you're interested in working with us, email me at timmy@guavacredit.com, so we could accelerate this vision much more faster we could bridge the gap as soon as possible. Just to put this in context, we have over 100 million small scale businesses operating within the country and within the continent, and this business practically have no access to credit, and they are the backbone of African economy. So we just imagine empowering these people to be able to do more with the little they are already doing. The sky is the limit for us.
Absolutely. Thank you, Timmy, for that. So, I mean, let's just round up with this in terms of where do you see the fintech space in Nigeria? I mean, like in the next 5 years, in the next 10 years. This is a sector that has been raising the largest amount of funding, VC funding, compared to the other sectors. So what do you think is going to be like in the next 5 years, in the next 10 years?
So I think fintech, they're not doing bad. They're doing very, very well, extremely very, very well as it stands today. But I think in the next 10 years they will do a lot more better. And I would like to say something. I think, for example, within the last 10 years, one of the most performing sector we have in the country is the banking sector, which fintech is largely part of. So, and as long as there's still this friction as with payments, which we still largely have in this part of the world, as long as this friction with credit, which we still largely currently have, of course, I think within the next 10 years we should have as many as possible unicorns within the space, and hopefully Guava credit should be one of them. So it's still a booming space. Within the next 10 years, there's a lot to solve within that space. They'll still keep attracting funds. We'll still keep doing what little we can do. But I think it's a very big space, and within the next 10 years, I would love to see how it works out.
All right. Thank you very much, Timmy, for being on the show. It's a pleasure having you on Curious K podcast.
It's a pleasure being here.
All right, everyone. Thank you for listening to the episode. We hope you enjoyed it. And as you know, if you enjoyed this episode, feel free to share this with your friends. And let's keep the good reviews coming in.